Hello, welcome to this video on capital gains tax, looking specifically at chattels today. So normally capital gains tax relates to land and buildings, things that have a long lifespan and they tend to go up in value. So you've bought it at a certain price at a certain point in time, you sell it a few years down the line, you've made a gain and capital gains tax applies. So normally it's for land and property, but it also applies to chattels, which are tangible movable items. Tangible movable items are chattels. So this is aside from land and property. So this video is really just to look at chattels and some of the rules that apply to it. It's a bit of a nuance within capital gains tax, but it's important to be able to know the rules of this as they relate to chattels. So capital gains tax can relate to these items of tangible movable property, which are called chattels. Now, if a chattel has a life of less than 50 years, it's called a wasting chattel. Under the tax regime, it's called a wasting chattel if it has a lifespan of less than or equal to 50 years. And it's completely excluded from capital gains tax. So these are the sort of things that are probably likely to go down in value. So there's not really likely to be a capital gain. So if you think even of a car, for example, a car is not likely to last for more than 50 years. It's not likely to have a gain when you sell it. So wasting chattels are completely exempt from capital gains tax, with a few exceptions, but for the sake of this video they are. So the other types of chattels are non-wasting chattels, and they have a lifespan of 50 years or more. So if you sort of think antiques, valuable pieces of art, furniture, old grandfather clocks, that type of thing, these are non-wasting and are included in capital gains tax as long as they have a lifespan deemed to be 50 years or more. So capital gains tax, chattels, non-wasting, included in capital gains tax. Now there are three reliefs, three little rules that apply to non-wasting chattels, and I just want to cover those off because they're quite simple, but they appear quite tricky whenever you first look at them. And if you're doing an exam on these, they can be quite hard to get your head around if you don't fully know them inside out. So chattels, non-wasting, there's three reliefs available under the current year tax regime. I'm just going to cover those now. If you sell this non-wasting chattel for less than £6,000, less than or equal to £6,000, the gain is exempt from capital gains tax. So it's a piece of art and you've sold it for £5,000, £5,995, anything under £6,000. Doesn't matter what you bought it for, if you bought it for less. The gain that you've made is exempt. You don't have to pay capital gains tax if you sell it for less than £6,000. So that's the first relief. So that's kind of nice. Nice to know if you've got something that's worth £6,000 and you can sell it, there's no tax on the gain. The second relief, marginal relief. So this time you're selling it for more than £6,000. These are the rules, okay? So this time the gross proceeds are more than 6,000. There it was less. You're selling it for more than 6,000, but it cost you, the original cost was less than 6,000. So something that you've bought for maybe £4,000 or £5,000, you're selling it for maybe 6,500, 7,000, 8,000 more. This marginal relief rule applies. And this is a slightly tricky one to get your head around initially. So what they say is the capital gain is the lower of the actual gain, which is the actual proceeds minus the actual cost. Okay, so you do that first calculation. What did you get for it? Gross proceeds minus the cost. And you compare that. You compare that to 5/3 times the proceeds minus £6,000. So that in the second calculation, you assume that you bought it for £6,000. You put in what you sold it for. You take the difference, which is the gain, and you multiply that by 5/3. And you pay the lower of those two. Now, that's the first point at which I anticipate somebody's going to get totally lost in terms of thinking, well, what's this chap actually describing here? So say, for example, you have sold something. So we're looking at this one here. You sell something for £7,000 and you bought it for £5,000. So there you have a gain of 2,000. So what this marginal relief does is it says, okay, you have an actual gain of £2,000, but the marginal relief says, well, slot in as if you had bought it for 6,000, and then multiply that by 5/3 and calculate what your gain was. Bear with me. So you keep that the same. You sold it for £7,000. Now, instead of putting in the price that you actually bought it for, whatever that might be, you put in £6,000. You slot in this value. You're told to slot in this value of £6,000. So you have a deemed gain of 1,000, and you must multiply that by 5/3, and that gives you 1,667. And your gain is the lower of those two. You pay the lower of those two. So in this instance, your capital gain, albeit that it was actually £2,000, is deemed to be only 1,667. So that's like a little. So that's what's called marginal relief. You're getting relief as if your original cost actually was 6,000, even though it was less. And it only applies if your proceeds are more than 6,000 and your original cost was less. And what it does is it says, work out your actual gain, work out your gain as if you had bought it for 6,000, multiply that by 5/3, and take the lower of the two. And that would be deemed to be your capital gain. So in this example, you would say, I have a gain here of 1,667. So you have a relief of the difference between those two, which is not a massive amount of money, but that's what marginal relief is, okay? It can be slightly tricky to get the head around it initially. I hope I've explained that one okay. So the third one is called restricted loss relief. And this one actually isn't really a relief. It's, if you think that you have loss relief, this is a restriction on your loss relief, and I'll explain what I mean. So again, we're in non-wasting chattels, 50 years or more, which are included in capital gains tax. So this is restricted loss relief. If we go back to the first example, if we sell something for less than £6,000, the gain was exempt. So here, we're selling it for less than £6,000, but we're making a loss. And what it's saying is, well, if the gain is exempt if you sell it for less than 6,000, then what the tax authorities are doing is they're restricting your ability to use your losses in this case. So the proceeds are less than 6,000, same as this. But here where you made a gain, it was exempt. In this example, you're making a loss. So if you make a loss, you're deemed to have sold it for £6,000. So it's this £6,000 figure which keeps popping in, and I'll show you in a very, very simple example what I mean by that. So if you have, say you sold something for £5,000, so the proceeds are less than 6, but you originally bought it, maybe you were on a bit of a whim, and you bought something for £8,000. So you bought a picture or a piece of art for £8,000. You thought, this is lovely, I really like this. 3 years down the line, you sell it, and you only sell it for £5,000. So you've made a loss of £3,000. So what they're saying is this restriction on your loss relief actually says, deem that you sold it for 6,000. So this isn't an option, this is actually telling you now. If you sell it for under 6,000 and you make a loss, you're deemed to have sold it for 6,000. You still bought it for 8,000. And then your loss is only 2,000. So what they're actually doing is they're restricting the available loss that you have to set against gains in the current year or in future years. So it's a restriction on your loss relief. So chattels, if they're wasting, they're exempt. If they're non-wasting, they're included. And then we're really into the sort of the low value, if you like, chattels here. So if the proceeds are less than £6,000 and you've made a profit, then that gain is exempt. Marginal relief, if the proceeds are greater than 6 and the original cost is under 6, then you have these two calculations. One is calculate your actual gain. Two is calculate the gain as if you had bought it for £6,000 and then you multiply it by 5/3 and you do the difference. And this is a restriction on your loss relief. You're in this sort of arena here, you're selling it for under £6,000, but you've made a loss, and your loss is being restricted because what they're saying is assume that you bought it for 6,000, not what you actually bought it for, and then whatever you sold it for, then your loss is deemed to be slightly less, assuming that you originally bought it for less than 6 in the first place. So, these three rules can be very tricky. I hope I've explained them relatively well, and you can sort of get a feel for chattels and then the three reliefs that are available for the non-wasting chattels sort of area. If there's any questions or comments, please post them. Thank you. Bye bye.